This is interesting, right? I think the best place to start is Europe, if you regard UK as Europe and Sweden and the Nordics. Why Europe and why now with this, Eric?
Ed, thanks so much for having me on. And it's a region that we're incredibly excited about. We're already working with so many of the fastest growing companies based in Europe. We think about companies like 11 Labs to great companies started by European founders like Stripe and Vercel. And I would say Europe is having a moment. And we want to be there for it and bring so much of what we brought to American companies to the companies operating in that region.
That's an interesting point. Like when you posted the news this morning on different social platforms, one of the interesting points of discussion is what is the competitive landscape like for you in Europe and how is it different to in the US? So like in America, and correct me if I'm wrong, but you go up against kind of the big banks. Is that the same in Europe or is it a different industry there?
In many ways, it's very consistent. I would say whether it's the US or even in Europe, classically, if you were a bank, you were able to move money. And if you weren't, you could sell weird aftermarket software to do your expenses or pay your bills or things like that. And the result was probably what most people still feel of, 1 hour a month, you have the worst hour, slowly doing your expenses across different systems. And part of what we proved out in the US is it doesn't have to be so hard. We've created cards where you tap them and your expense report is done for you, your books are closed for you. And the result is that companies spend less. The average business spends about 5% less. And the average business on Ramp grew last year by about 16%, which is multiple times the U.S. average. And so just as we've brought this to the U.S., we want to bring that same innovation and more to the great companies being built and operated out of Europe.
Operate out of Europe, but like lots. It's a global world. It's a funny thing to say, but many of your customers or clients, right? They would have a footprint operationally in different jurisdictions, like the US and Europe. And is this kind of therefore about like the multinational client that you're trying to go after?
It's a bit of both. I mean, so for today, let's say you're a multinational leader like a Shopify or like a CBRE. You can issue cards today locally and make payments all around the world. In Europe, in Asia, in Latin America, you name it, Ramp is able to do that. But part of what this acquisition brings is the capabilities to serve European headquartered or based companies without operations in the United States. And so they're able to benefit from that same global infrastructure, but it really allows us to reach a much larger market.
Talk a little bit about Ramp, the company, the startup, and you running it. You have like the who's who list of investors, and what I find interesting is not common, not unique to you. It's come up a lot recently. You sat on a lot of the money that you raised for quite a long time. You've gone out and done an acquisition. What's that like? Deciding to spend the funds raised.
It's, look, with everything we do, just as we're trying to help our customers get more from every dollar an hour, we want to too. And I think you're exactly right. The business has raised more than $2 billion of equity capital. The vast majority of it is still on balance sheet, and Ramp is even generating cash, even as we're one of the fastest growing companies in the world now.
Interesting. Would you give me a number on that? Any sort of financial metric on the health of how it's going?
I would say this. We've had 4 straight quarters of accelerating growth. The business is, call it doubling every year, which is really an outlier. And last year, I believe together, we shared that last summer we passed more than $1 billion a year in revenue in US dollars. And so we've seen that growth rate even accelerate. So it's quite unique.
You run a tight ship, and you're trying to grow Ramp, and I really appreciate sharing the data on that point. The landscape's very interesting. Like Brex selling to Capital One as an example. Like over many years on this show, the guys at Brex would never have said that would be the case. How do you feel about Ramp's independence, long term, and where it fits in a big sea of large financial players?
I think it's a really special thing. If you talk to, let's say, a finance leader of a company, let's say with 500 employees, their finance suite looks like a mess. We find there's something like 20 tools on average, something for cards, something for bill payments, something for AR, something for expenses, something for procurement, something for approvals. It's horrific. Right. And part of what we've done is collapse that and really simplify it. And I think that has first made us unique in the market and allowed us to grow even faster than the largest financial institutions. And so we're excited. We're over 2% of all the corporate and small business card transactions in the U.S. And while we're very excited about that, we look forward to taking on the next 98% and delivering something better.
Eric, we just have 30 seconds, but looking at Block as an example, will you reduce headcount because of AI?
Look, we have salespeople who are closing 2-3 times the dollar value of deals than we did last year. And from my vantage point, when you have people who can do that, you want to hire as many as you can as fast as possible.